Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And world on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Monday. Well, I don't know. We kind of got in. It's a little bit of a lighter week this week, so we might. I don't know if we're going to put on a lot of risk or not. It's already starting to move though. The treasuries are, so we'll see what we get. We got a bunch of stuff we got to research here before I get into doing anything. Oh man, I need to stop doing this thing where I don't have my big chart up. Maybe I need to just have it open on the big one. I'm concerned that like having the big chart up, that it's using data, right? So I don't, okay. Oh, we'll open it up over here. Okay. So treasuries are a little bit pressured here this morning. They're just below the levels that we had on Friday. I think it would take a lot for us to get down back below 118 even. So again, there's this whole thing. The market doesn't think that the Federal Reserve is going to raise interest rates a full percentage point this next time. They think there's going to be 3/4. So the interest rates are kind of staying still around 3%. They're basically saying we don't think that they're going to get above 3% before they back off. So we'll see. But, that I think provides the potential for a big downside move. I'm not sure why they would do it now, but that's what's going on at the moment. S&P 500 is looking good overnight. Oil coming back a little bit too. So maybe some of the global growth concerns are waning. Natural gas on the way up. Silver and gold just... They had 3 really ugly moves here, in the last week. Well, let's just say in July. Maybe they're finally gonna, I don't know. We can't really tell from the movement over in there, but maybe they'll pull something out. I don't know. Silver and gold haven't been very good because the dollar has been so strong. And then we got copper. Copper recovering a little bit too. So that must mean, we'll update that, yeah. That must mean coming back over to here. And then, well, cryptocurrencies are looking fairly strong this morning. And the dollar is coming off. So the dollar coming off is very, very good for the markets. Very, very good for the markets. Man, you see that trend on the open there. They pushed lower. Well, I'm not going to be taking any trades today. I am opening up a new account, and I think that we'll have things started ready to go for tomorrow. I'm just not quite feeling well. I was kind of having like weird dreams when I went to bed last night, and I would like have this thing where I'd wake up and feel like I wasn't breathing. Like felt like I was suffocating. So that's probably not the best for taking trades. Oh man. But it is a strong move down. It does make me want to participate. Look, they're gonna get back to 3. They're gonna touch 3. The whole thing that the treasuries, I thought that some of the data, especially on Friday, kind of supported the view of raising interest rates a full percentage point. At least I would say that the case was better than it was before. But it seems, based on the comments from the Federal Reserve members, that the case would have to be a lot stronger than that. So that's why they backed off. So I'm just kind of questioning, why are we coming back now? Why are we coming back now? Did I miss something here this morning, maybe? Mm-mm-mm-mm. White House advises gasoline prices should come down this month. Yeah. Odds of 100 basis point hike are dwindling, but housing data will matter. Let's see. When that is Wednesday, though, right? There's something earlier. Oh, we got the NAHB Housing Market Index, which is a level of diffusion index based on surveyed home builders. I don't know if that particular news is going to be that impactful, but maybe they're anticipating that'll be really good. I don't know. But this week, when we come down into looking at the bigger picture, building permits, housing starts, Tuesday, existing home sales, Wednesday, Philly Fed, Thursday with the unemployment claims, CB leading index, which, is tends to be muted, right? Because most of the data that's used in the calculation comes out earlier, right? And then Friday, flash services and manufacturing PMIs, which were impactful last month and could be impactful this month. And then that brings us into next week, where we've got like the federal FOMC meeting and everything. So there's not too many data points before that FOMC meeting happens. But another thing is we're in the blackout period. So Federal Reserve meeting members aren't speaking. You won't get any of those moves. And that last time around, that led to really dramatic moves because he came in and there'd be like a key economic indicator print that would have a really big impact on what the Federal Reserve would do, but we weren't able to hear from them, right? Because of the blackout period. Okay, so we got that out of the way. Next thing is we need to look at Goldman's results, right? Futures jump as traders scale back Fed hike expectations as economy slumps. Well, okay. Bank of America profit tumbles, earnings per share, equity trading miss, loss, revenues jump. Oh, is Goldman net today? Well, we can read Bank of America. Let me come to my earnings report calendar. Oh, no. They are coming out today. But it's like at the market open. Ooh. That must mean that their results are really good. That must mean that their results are really good because they're usually earlier than that. They're earlier than that. What times are these? I'm assuming they must be Eastern time. Oh, now press release 6:46 a.m. Goldman Sachs isn't doing a press release; they're just doing a conference call. It says 9:30. But their press release is 6:46. These must be Eastern time. So that would mean that this opens with the market open. Bank of America moments ago unveiled Q2 earnings that joined the disappointment parade, missing on the top and the bottom line, reporting revenue of $22.7 billion in line with expectations, and earnings per share of 0.73 just below the 0.75 expected. 9% drop from the earnings per share reported in Q1 and a 29% plunge from Q2 2021. Net income came in at $6.247 billion, which is down from $7.064 billion last quarter and a 32% or $3 billion plunge according compared to the blah, 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 blah. That doesn't sound that awful. Revenue, net of interest expense, rose 6% year over year, but it dropped 2% from Q1 of 2022. Just showing, so 2% slowdown from this year. Driven by lower investment banking fees, mark-to-market losses related to leveraged finance positions, and lower service charges due to non-sufficient funds and overdraft policy changes, partially offset by higher sales and trading revenue. Okay, so they're losing money trading, essentially. With the rest of the market, mind you. We find that trading revenue, excluding DVA, rose 11% year over year to $4 billion, just barely missing the $4 billion Bloomberg estimate, and driven by an equities trading miss offset by a modest fixed income beat. Good job, fixed income. Beating the estimate $2.29 billion, according to the bank. FIC revenue increased $2.5 billion, driven by improved performance across all macro products. On the expense side, non-interest, blah, 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 blah. Brian Monahan said that solid client activity across our businesses, coupled with higher interest rates, drove strong net interest income growth and allowed us to perform well in a weakened capital markets environment. As we enter the second half of the year, we believe we are well positioned to deliver our shareholders while continuing to invest in our people, business, and communities. Those treasuries are not backing off of the low, but they have yet to break that 118.080. The 30-year is not well aligned for them to be able to drop, but I do see some flattening in this move. So if it goes, it's going to be the 5-year probably pulling them down rather than the 30-year. Not seeing any significant moves in the dollar. I do see that the Japanese yen is moderately pressured to the downside. So I would have expected maybe a little bit better of a bounce here. But so far, not really getting that kind of like, post meta order regime change kind of thing. It's kind of acting like, well, we're just going to keep going and going and going. But they're not really going and going and going. They're just sitting there. They're just kind of chilling out 118.08 half. In knee-jerk response, the Bank of back stock has been volatile after initially sliding as much as 2%. It's Bank of America. I forget that it's BAC, Bank America, not Bank of a. Yeah. Anyways, why it's BAC? That's a weird abbreviation, but kind of works, right? It kind of works. Porsche deliveries fell 5%. Oh no. Well, that's interesting. We're in an interesting spot. The recession may already be here. Yeah, okay. Of course. Yeah, when Bowler downplayed the 100 basis point hike, that was a little surprising to me. I don't know. Perhaps we feel like that, the impacts from raising interest rates do take a little while to become apparent. And we just already raised 75 basis points. Maybe we don't need to be in a hurry to raise 1%, right? I do want to see us above 2% though. So we'd be 2.5 here after the we'd be 2% after FOMC meeting. That's what they do. They do 75 basis points. I'm wondering, I don't know, 2% enough? Could be. I mean, it's gonna be it's slightly above your target, 2%. Your inflation target, 2%. I mean, it's like, look at this. It's like perfectly positioned to go, but there just seems like absolutely no real desire on the parts of the market orders to go and take it. Hmm. Overall, I would say on the news front, it's a pretty quiet morning, which is also kind of makes me wonder why the treasuries appear to be trending down as aggressively as they are. I'm just kind of waiting, like it could just break and just go. Okay, there you go. There they traded it. It absorbed though. Well, I wouldn't say absorbed. I would have expected that you'd have to trade more than 1,000 to break that. Um, and why the heck not? Why not? Fun on a sim trade. I'll put an order in there. That way, if any of you guys are actually short. Oh, there it goes. All right, bail. Can hear that. I have another computer in here. If you see, it's still on, and I can hear it, and it bothers me. I think I'm gonna go turn it off. Since when was white people Twitter a front page subreddit? Ooh, Reddit. So there's some reloading there at 07.5. Oops, too late. Too late. Oh, well. Here's a thought. Earlier we were pointing out the discrepancy between what the market was pricing in for interest rate hikes from the bills and what the 10-year treasury level was. And, was like, there's clearly a market imbalance here. So one or both, one side of these is going to be wrong. One side or the other is going to be wrong. And now I'm starting to wonder, what if it was both? What if it was both that the market's pricing in 3.5 was wrong, but that the 10-year treasury does need to actually rise above more to like 3.2. So both sides of it were wrong. That would be interesting. Now you're getting an actual real pullback. So it kind of seems like they saw that there was some liquidity here at 08, so they traded through it, but then it started to get a little bit too late. They backed off. There's some liquidity 06.5. Hmm. Okay. 136 to uptick? Really? Well, now that I have that other computer off, kind of miss it because it's super quiet this morning. It is super, super, super quiet this morning. Hard one message over my news squawk. Maybe. Uh, yeah, okay. 421 bid. It's kind of giving me this liquidity hole. Look at 06. Oh, you discovered the channel this weekend? Hey, thank you very much. What was the first video that you saw, and how did you find it? Yeah, it's kind of doing that thing there. I mean, it is trading some volume there, but it just kind of like, look at how easily that pulls. Only 100 contracts both ways on that. I mean, they're bid at 700, but I'm going to bet you that if they tick down again, that pulls really easily. Large bid. Japanese yen bouncing here. Oh, the conditions and trends video. That's I really enjoyed making that one just because it's so I think that the market is just so much more nuanced and complicated than people make it out to be sometimes. They all say, oh well, all that matters is if we're trending or not or whatever. And well, I think it's a little bit more complicated than that. So that really makes me happy that you enjoyed that video. That was, of the order flow videos, that was the one that included the most like Seth's observations in it. The two that came after that. So did you watch the one? One is the stylized behavior of markets. That was the final one in the order flow series. And then there was another one that I wouldn't really consider it the order flow series, but is kind of like an addendum to all of that, which was the inelastic market hypothesis. Those two are like my best videos in my opinion. Like, I'm not gonna say that like they were the best produced or the most engaging or best performing or anything like that. But in terms of the amount of benefit that you can derive from them, those are my two biggest ones. I'm giving you information that, like, frankly, I should have just kept to myself maybe. but I mean, it's public research. It's out there, right? But these are things that, like, man, retail traders would really think about the world differently if they knew these things. Those two. And the conditions and trends one was where I was just kind of hinting at it. I was just kind of saying, like, you guys realize there's a little bit more out there than what you realize, right? Are they going to come back to 08 now, huh? This move has been kind of interesting because, like I said, when they came down, it was very pressured, but the orders just weren't coming. The orders just weren't coming, And so then they did break, but it snapped back up very, very easily, right? So kind of suggests to me that maybe that trend is a little weak. But I think here, because we've got such an apparent liquidity hole at 06 and 08 half, we might be able to use this range to our advantage a little bit. We got an area where trend is not very clear, but ability to get filled is probably better. Well, that's not what I wanted to see. Yeah, really enjoyed those videos. Oh, yeah, very good. So you saw all of them. That's good. Were you the one? Because somebody left a comment the other day that was like, which one was it? Oh yeah, it was you. It was you. Where you were like, "There's only 620 views. You deserve at least 10 times that." Well, I often feel the same way, but like, here's the thing: not everybody needs to know, right? Like, it's okay if not everybody knows. That just makes trading easier for us. The less people that know these things, really. I mean, like, I think that there's enough societal benefit from this information that it's worth me sharing and giving it to everybody. But technically, it's going to make trading harder for us if retail traders all knew this, right? Maybe on the other hand, it might actually make trading easier for us in some respects, just because if retail traders were more focused on the right things, we would have more people to collaborate with, and we'd probably have more tools that would give us the sorts of things that would really actually benefit us, right? Because the retail trading space is the vast majority of it is focused on providing people with technical analysis, which is, kind of questionable utility, right? So doesn't necessarily have to be popular. What we do is super niche, right? We're doing futures, we're doing order flow. Like you look at trading, right? Here's trading, and then the number of people in trading that do futures is like this teeny little dot over here. Like you're talking about per month, maybe 20,000 people a month searching for futures compared to millions and millions for the stock market, right? So that's part of it. And then order flow is an even smaller part of that. And then I'm even kind of going beyond that and saying, well, even with the order flow, we're kind of wrong about a couple of things. I do agree. This is why I really, really appreciate when traders share this. Yeah. Thanks. I mean, it took me a long time to figure this stuff out. It did. Like I kind of knew it, but I didn't understand it in that way. And that was another driver behind wanting to make those videos. Was like, here's the real meat, the real piece of information that you can know. This information is valuable, right? And you can kind of make your own implications, because there's this other thing, which is like, here's the research. What can we do with that research as retail traders, right? Like the research, that's provable, 100%, right? That's empirical evidence, well peer-reviewed, well-established. Our interpretation of how you can potentially utilize that information and the implications that it might have for us, that's kind of more our thing. That's not provable. There's kind of a leap of faith there in terms of translating it into a strategy, right? So, oh, that's right. There was somebody else a couple of days ago left a religious based message, and I was like, well, that doesn't really have anything, but we'll leave it. I don't see any reason why you can't leave it, as long as it's not a bot. As long as it's not a bot or obviously against YouTube's terms of service. Oil taking a little bit of a jump here all of a sudden. Maybe they'll make a run back towards $100. I don't know. Would be funny if all of a sudden the market kind of turned a little bit more optimistic and then that just made oil go back up and then the whole kind of problem goes around in circles again, right? Hmm. It's kind of doing it there at 06.5 again. So it's really this whole range between 06 and 08 kind of looks like low liquidity. Seems like a sell day. It is. You know what? I was taking a scalp just because I was bored. But I probably shouldn't be in this one anymore, huh? Yeah. Well, there's -4. Should probably be my max, right? Didn't get my fill the other side. Because like the thing is that we definitely got some good sell trend, but I don't really have a very good predictor of order flow to explain why it's moving down, right? I've been wanting for it to move down, but it's okay. I'm not feeling super what would be the correct word? Oh, was that a new low? It was. It was a new low. Oh, 04 doesn't look very good to hit into. I live in France. Nobody knows that markets exist, so I don't even consider talking about future markets. Yeah, I mean, that's the way that it is for most people. And like the thing is that you know, most people aren't interested in talking about it, right? You're you're my people. Like if I didn't have this stream so that I could talk to you guys about what the Federal Reserve is doing and what the market is doing, I'd probably go crazy. My wife certainly isn't that interested. You want to be invited back to the parties. Yeah, exactly. I'd like to run some parties. Once the babies are a little bit older, like I think that given well, I could be wrong, but I think that to really be able to have a party and not feel like I have to watch my babies like a hawk, they need to be at least 5. So if I can get the babies to 5, then maybe we can start having people over. Until then, small groups. Small groups. See, as soon as I bailed out, they're going to get out and go back up there. A Fed party. We should have if the Federal Reserve the interest rate decision didn't happen at noon, if it happened in the evening, then we could have like finance Super Bowl, right? That'd be great. Are we gonna have parties when it's time for the elections? I don't know. I just this drives me crazy. Okay, my interest in politics has waned significantly. But I'm pretty sure that the key driver behind that loss of interest is that the media is just not reporting on very much anymore, and they're keeping things boring because Joe Biden is in charge. Right? The politics aren't as interesting right now. But when they're doing primaries and debates for their primaries, we can have parties for that. Could be fun. When we were doing it for the Democrat primaries, that was really fun at first until it became apparent that Joe Biden was going to win, and then it was like, what is this crap? Stopped bothering. The debates were terrible. Some of the debates were terrible. But the Republican debates, man, the Republican debates could be interesting, guys. See, that trade was what I was hoping to do the first time. I probably should have bailed on it. I haven't been doing these kinds of trades for a while because the market has just been so trendy. I think, I'm just maybe trying to get back into it. So I made a little mistake there, but I think we're okay. We're down 3. Yeah, we're down 3. Wish I had gotten that better. They get a Dutch 08 half. Well, there's a little bit of a large order there. Liquidity today is just terrible, isn't it? Is it going to be like this all week? I would have thought that we would have been going at least with 900s of thousands, We'd still got 8s all over the place. Now the real question for Theo is what kind of videos would you like to see next? My plan is, and what I was writing over the weekend was about treasuries. We're going to have more stuff about treasuries, and then we're going to pivot into talking about the Federal Reserve a lot. But maybe that's not what you guys are interested in. I did make, I also thought maybe people would be interested in more trading hardware. That definitely seems to be like a topic that has a lot of general interest. Although the KVM switch video didn't really do super great. I still get a lot of views for my short that I posted. I need to make shorts out of this stream way more often, man. Because every once in a while we'll get into something that is really informational, and we could have made a short about it. Okay, what's your take on equities going bid Friday and retail sales? The high sales is against what we want to see a slowdown. Well, you want to see a slowdown, Jacob? Shame on you. Shame for shame. No, I don't. So let's just come back here to how do I do this? Where do I get it? Comes up over here. It's over here. Daily. There we go. Yeah, I don't like the way that Jigsaw does charts. Or sorry, don't like the way that Ninja Trader does the charts like that. Okay, come up. There we go. Okay, so let's just review. Okay. On Friday, it was retail sales was at 630. So at retail sales, they didn't really do a whole lot. And then there was some comments from the Federal Reserve that we're probably not going to do a 1% basis hike. He didn't say it like that. It was like, well, that's not enough. There was also consumer sentiment that was at 8. So you could see there was a bit of volatility around consumer sentiment, but then ultimately they moved higher again. Then you come over to the treasuries. What were the treasuries doing during those times? And they were getting aggressive at points until they reversed at around the same time that the S&P 500 took off, which again was like, oh, well, maybe we're not going to do a 75 base, or we're not going to do a 1% basis point increase. So from what I can tell, what happened on Friday was that the market decided that the next interest rate change is going to be a 75 basis point hike. And that was good for equity markets, then that they could take off this larger hike, which would have been damaging to markets, off the table. And so that was a little bit of a relief. So I think that was the primary driver behind them going bid on Friday. Now, here's the thing, Jacob. I think that there's some better flows in the equities. So there are a lot of stock buybacks that have been held back that are about to come through now in like this next week. So you couple that with like interest rates seemingly stabilizing here, right? He could be bullish for the markets. Now, I'm really interested to see here in 15 minutes what Goldman's numbers are going to be. Goldman is part of it is because I own them, but they tend to be a really good barometer. So we want to see that. If Goldman earnings are good, that might bolster the argument that equities can actually move up in this range now. I won't allow myself to ask for contents considering that I haven't consumed all you have produced yet. By the way, while I'm thinking about it, because you're French, right? You say, I live in France. Yeah. My favorite researcher. You go and get on LinkedIn and look up Jean-Philippe Bouchot. I think that's how you say his name. But in English, like when I read it, it looks like it's saying boop, Bouchot, boop, boop, Bouchard. Bouchot, I think. I'm attempting. No. I wish. The funny thing is that the stock that I hold in Goldman is just the stuff that they gave to me. I remember there was my boss at the time. I told them, they gave it to us, and I'm like, this is like a good price that they gave it to us at. Like they gave it to the employees because they knew that their stock price was cheap. I'm like, you can just hold this. You're probably going to get double your money or more, right? And he's like, oh, I hope so. And then he sold it because like he needed to do it for something, and he had like options and other stuff too, right? We're talking about a guy that's like the chief. Yeah, I think he's the head of technology over at Wells Fargo now. So like he was a pretty driven guy. You get what I mean? And he sold it, but I held on, and I did get double my money and better. And that's how I have it. And then I've just kind of used that to like make my portfolio larger. So it started with 1,000, and then I put a little bit more in, and it's like at almost at one point it was almost 7. At one point it was almost 7. We came just short of 7. But then the whole market crash happened, and I probably should have taken some risk off, but I didn't. It's okay. Because I was trying to, I don't know. You think I did the right thing? I'm kind of more concerned about missing out than I am on like taking a hit. Clearly that wasn't the right decision in this particular instance, but like in the longer run, I think that it might be good for me to, do that. Although I have to say, again, I gotta warn you guys. So every time that I go, like I have a friend that she posts information on Instagram now. I know her from weightlifting. Now she's kind of a financial influencer on Instagram. But her thing is mostly like just buy index funds, which is like, I mean, it's not like it's terrible advice or anything like that. I mean, for sure, most people should just be buying index funds, right? It's kind of boring. It's just as kind of boring, right? But the thing is I'm not so sure that index fund will always be the right thing. I'm not so sure that the index fund will always be the right thing. I think that the time it may come in the future where it changes. I mean, the market's never going to be like the same forever, right? Although if that does change, it's probably going to be more like how do you say, a law changes or something like that, right? If it changes. But I digress. So everybody has this idea that, okay, the market is down. This is the time where I contribute the most money that I can into my index funds, and I'm going to be a millionaire, in 5 years or something like that. Like I keep hearing this. There's so many videos on TikTok where they're like, you want to become a millionaire? Just put as much money as you can into the market right now, because this is when millionaires are made, quote unquote. Okay? No, it doesn't work that way. First of all, you're probably not going to become a millionaire from it. But number two, we're probably not just going to go straight back up to all-time highs again. Okay? Like, there's this concern that we're going to have a larger washout, right? The Federal Reserve is going to raise interest rates. So that's going to crash the economy. And, you know, if we were to compare this to 2008, we're at the same point in 2008 where you had a decline through most of the year, but the shit didn't really hit the fan until like September or October, right? And then things really, really fell. So there's a lot of people in the market thinking that that's what's going to happen, right? Maybe that will happen. I think that there could be more downside, but I don't think that it's going to be as extreme as 2008. I hope not. I hope not, at least. But then the Federal Reserve comes out, makes interest rates easy, and we just float back up again, right? I don't think that that's what's going to happen, because the inflationary pressures that we are seeing on the markets right now are things that are going to be persistent for at least until 2024. At least until 2024. And so I foresee a market where we don't get a new high until 2024, if not long after that. The road to recovery might take a long time. It might take us a good 5 to 10 years to make a new all-time high. And during that time, there might be some periods where the S&P 500 returns well below the market average, because we've been above it for so long, right? Then you kind of in this world where the stock pickers really benefit, right? People that picked the right stocks are the ones that are going to catch that bottom and make the really big profits. And if you're in the index fund, it's just kind of like frustrating, at least, you know, in the short term, until everybody gives up on that, right? Even my mom's cat is talking about further downside. When everyone's negative, the market will rally. There is something to, like, who else can sell? Who else can sell? The market sentiment is just so insanely negative. Fixed income is boring, but is the best side of markets. Well, I think that fixed income is really exciting, though. I think that fixed income is boring because people don't understand it. Like, really? What happens here in the 10-year? Everybody watches the E-mini. All the retail traders watch the E-mini because, you know, it moves the most. NQ. The NQ moves the most. The 10-year is by far the most exciting instrument, guys. The reason people don't think it's exciting is because they don't understand what they're seeing. Right? Once you understand the order flow, once you understand that, hey, this, you know, having 700 offered and now all of a sudden it's 50 offered, you know, that's an exciting change. And the way that this inside bid and offers kind of changing matters. Now you have something to watch moment by moment. It becomes exciting again. And then the things that move the treasury market, that stuff is definitely exciting. Those are the headlining moves, the biggest, most impactful changes on the economy. Fixed income moves equities. There really is. There's not, I don't think that I could go and I could focus on one stock and stay interested in just talking. There's not enough news and information on that one stock, but the treasury market, there's always something going on. Although I think we're gonna have a hard, well, I was about to say, I think we're gonna have a hard time transitioning. What I should really say is I think we're going to have a difficult transition, but it should be one that we should be well equipped for. So we're moving from a market that has been very, very strongly driven by changes in expectations surrounding interest rate hikes. We're now approaching a period where the market believes the interest rate hikes are well priced. So basically, they're like, the Federal Reserve is going to do 75 basis point hike this time, and probably a 75 basis point hike next time is what I think that they're pricing in, although we might need to check that one again. And then from there, then what, right? Treasuries are going to just kind of stick around where they are, and unless we see something that says, oh, now they're really going to raise, or they're going to start lowering rates, or whatever the deal is, right? And then we can have fun again. But if not, then we're going into a range-bound market, and we're going to have to rely more on the kind of more of the systemic flows, the big players doing their end-of-month rebalancing and all of that sort of a thing. Probably going to have to start relying on that sort of a thing more often, and we're probably going to have to be more patient, right? So that will be a difficult transition, and that would be a situation where I would tend to lose a lot of money because, you want it to trend for you. But you notice here this morning, I didn't try and go along with the trend, and I was taking little trades, right? Because I believe that we're making that shift. And so we should see the volatility come in little bit by little bit. GSB, did it just come out? I thought that it's not going to come out until the bottom of the hour. No, I haven't seen anything yet. Well, they do their conference call at the market open. Them doing their conference call at the market open kind of suggests to me that it is good, though. What would be the end of day trading? How many trades do you make per week? It really depends on the week, but a lot of weeks here. So this is a situation where like there's the question that you ask, and then there's the piece of information that you really actually need to know. I usually take at least one trade per day, but there are days where I don't take any trades at all. So the thing that you've got to realize is that in order for us to have a positive expectancy, we need to be able to predict future orders. Okay. That means we need to have something that is going to directly affect, that's going to directly induce other people to take trades, to submit orders. And the direction and magnitude of those orders is something that we can predict, generally speaking, right? A break of a specific moving average line, diagonal, whatever it is, in my experience, is not a very reliable predictor of order flow. You will often get a lot of volume at those kinds of points, enough to make you think that like it's working or it's not working or it's significant. But then like the result of it is very random, and the actual volume that we see come out of it is a little bit random and hard to predict. So, but news, for instance, news is a really good predictor of order flow. If a FOMC member came out, of course they can't because we're in the blackout period, but if one of them came out, or I guess that would have to be a Wall Street Journal story, right? Wall Street Journal comes out and they say, they're not saying this, but let's just say, for instance, if the Wall Street Journal came out and they said over the weekend, the Federal Reserve members started to become more hawkish, and now some of them are leaning towards a 1% hike in July, right? Then they would sell TF out of this, right? That is a predictor of order flow, and they would probably keep selling it all day, right? They'd probably keep selling it all day until the Treasury is at 3.25. Okay, so we need predictors of order flow, and guess what? You don't always have one of those. If you don't have one of those, you don't have a trade. So it should generally be the case that there are going to be days where you just don't take any trades because you don't actually have a predictor of order flow. It's just what you're seeing is just random. And just because the market moved doesn't mean that you needed to take a trade, right? The thing that's going to make the biggest difference for you guys, I gotta say, the thing that's going to make the biggest difference for you is understanding when you have a trade and when you don't. When do you know When do you have a piece of information that's not priced into the market yet that's going to create future orders? And when do you have just noise? And if you can stay out of the market when it's just noise, trading is so much easier, man. It's so much easier. It's hard for me. Hard for me because I always want to take a trade. But I get a lot of people that will come through here. And I'm not saying this is you, Hoang, but I get a lot of people that will be like, oh, why aren't you in a trade right now? This is boring. No. Well, because you don't always have a trade, guys. How much are you relying on actual volume? Hardly any at all. So here's where I find volume profile to be really useful. Is like, so for instance, when we had this move down, we were at 08.5, and then we dropped below that. I like to see how many contracts did it take for them to move, right? But that's just like the resting liquidity versus what actually trades. That's one level of it. Like that's the most granular base level of watching the order flow is like, what were the limit orders? And then what were the market orders that came in against those, and how many of those limit orders basically canceled? Because the way that this works, there is an incentive for these robots to want to be in line, even if they're not going to take a trade. Because what if they change their mind? What if all of a sudden they do want to take a trade? They want to already be in line. So there's some of this liquidity that's out there that's really like saving itself a spot in line and will cancel, right? But then there's other people that actually do want to take a trade. But if I wanted to sell 30,000 contracts up at 118.13, right? I'm not going to show it all, right? A lot of people say, well, the market tends to go towards the liquidity or whatever the deal is. It's not that simple. If you put big orders like that, harder to get them filled. Okay. So tactically speaking, big player, they don't show all of their liquidity. They kind of they trickle it out as time goes on. And the volume profile makes it a little bit easier to see that. Then I can see, okay, below 06, how much did they trade? Right? They only traded about 12,000, which isn't very much. It's decent, but it isn't very much. That's why when we came back to 06, I was kind of more aggressively buying it. And I was even trying to maybe like add on to it if it came back, but it just didn't do that. And it ran away from me. Because I knew that extension down below was weak and that the liquidity hole at 08.5 was like right here, right? So in other words, you need to be able to see the latent liquidity, the liquidity that appears over time, and volume profile can help you see that. But two things on that, right? Number one is that a lot of things that we see in the volume profile are actually like, well, we should be able to see it in the order flow before it shows up. Like this 08.5, like we should have been able to predict that 08.5 was going to become point of control well before it happened. And I would expect if we continue moving up here, which I don't know if this is the best price. Let's just do it for kicks and giggles because I don't want to miss a move if they do break. But it's probably better to get something down in here. Okay. But if they do move up here, we're probably going to get some sort of a liquidity hold at some point, and I will identify it if I see any potential candidates, and then that's likely to become a point of control, right? So that's the first thing. The second thing is that I would be very, very cautious about this whole thing of like looking at where yesterday's point of control was and making some grand trade about a tendency where it tends to go towards or away that in certain situations and that sort of thing. Okay. So like now you're getting into technical analysis, and I don't believe in technical analysis. I don't believe that a certain price being significant yesterday just because a lot of volume traded there at that price, it means that you have a good expectancy on a trade for it. Okay. Often, again, what creates the point of control? It's often those liquidity holes. Okay. Areas of liquidity where the liquidity is lighter where the rest, what you'll see is like the resting liquidity will be really light. I don't think that we're really seeing it right here. What I'm seeing right now is that the market just seems to be moving around. And it can move around pretty easily. And the Japanese yen is probably a well, they're all moving together, so I don't know if the Japanese yen is driving them per se. I'm seeing gold move up a little bit, though. That's interesting. I'll try this. Try some gambling trades. 100% my best weeks are weeks where I only took 1 to 2 trades. Oh man, yeah, if you catch something that runs, I mean, in the treasuries, you can catch these like multi-day trends sometimes, right? Anyways, I digress. There are a lot of really good tools out there. Volume profile is a really good tool that professional traders use. Okay. The DOM is a really good tool that professional traders use. Okay. Charts, frankly, are really good tools that professional traders use. The problem is just that we as humans, technical analysis is our natural tendency as humans. That's what our brains are built to do, is to notice patterns in things for hunting so that you could predict where the animals were going to be. That's what evolved this in our minds at first, right? So we always kind of have a tendency to want to do technical analysis to things. But you just got to realize technical analysis isn't very effective. Technical analysis is not very effective on trade stocks because there's too much noise, essentially. Like here's so let me give you an example. There is a tendency for really large institutions to rebalance their portfolios at the end of the month, especially these risk parity funds. They have to have a certain percentage of their portfolio in stocks and a certain percentage of their portfolio in bonds. And if that month they made a ton of money in stocks, then they are required to sell those stocks and buy bonds to bring things back to that correct balance that is like in their prospectus and that they've told all of their investors that they're going to maintain, right? And when they do that, that's order flow that can move markets, especially if we're in a market where like there's not a whole lot going on, right? Then those flows are like really pivotal. And they can move price very, very far away from fundamental value, right? Okay. So this happens every month, right? Well, so why don't you see that in the chart? Well, for one thing, it's not always a buy and a sell, right? Because the way that rebalancing is going to go is going to depend greatly on how much money they made in equities and how much money they made in treasuries, right? And how much money how much money got contributed to their fund and how much money got withdrawn from their fund, right? So there's a bunch of pieces of information in there to kind of calculate out which way they would be going and how, like, what the magnitude is going to be is going to change every month. And it's based on pieces of data that we don't necessarily have, right? And then on top of that, there's all sorts of other crazy things going on all the time too, right? Like, fundamentals, markets moving off of breaking news or whatever the deal is, right? And so to be able to pull out that institutions are doing this statistically is really hard. Is really hard because there's just too much noise. The amount that the markets is going to move naturally is greater than the amount that might be available for us from front running that, right? So we can't just pay attention to the technicals. We have to know we have to know what's going on. We have to know, okay, so here's a potential trade because of the way that their portfolios are going to rebalance. If I know enough about their strategy, I can predict the scenarios where they're going to do something before they can even do it, right? So this is why technical analysis in stock markets doesn't work very well. There's too much noise. let's see here. What was NASDAQ killer saying here? And quants are being laid off too because you can't reduce risk by reducing risk. You reduce risk by having vision and being on the attack mode rather than being on the defense mode. Well, they are. I mean, there's the whole VAR risk sort of a thing, right? So when you talk about a VAR shock, for instance, what people are talking about is there are these situations where you have a model that's based on the largest event that you've ever had, right? And this determines how much risk you're going to take. And if you have an event that's larger than that, then you have to readjust all of your calculations about how much risk you can take on. VAR shock, right? And then everybody has to deleverage themselves to account for it now, right? I don't know if quants are being laid off right now or not. I think that there have been a lot of layoffs, but they're probably in places where those people are going to be able to find jobs very easily. So like there was a tech bubble burst, like the big tech companies are laying people off a little bit, right? Well, those people are probably going to be able to find jobs elsewhere. They might have to move out of California though. What do you prefer, ESNQ or ZNZF-ZB? I very much prefer the treasuries. And the reason that I prefer the treasuries is because I have found that it's easier for us as retail traders to find reliable predictors of order flows in the treasuries. When you have a piece of news, how the treasuries are going to react to that piece of news is often more predictable in the treasury than it is in equity markets. The kinds of rebalancing flows and everything that you get in treasuries are really, really reliable because there's so much liquidity. That means that there's lots of flows coming through that you can potentially predict. And the research suggests that the larger an instrument is, the more likely you're able to find a good predictive signal for them. The equities, on the other hand, is an index based on 500 individual stocks, which means that there is just going to be a high degree of randomness in the movement on the S&P 500 in general. Kind of almost makes me wonder if doing any kind of technical analysis on the S&P 500, like everybody's always doing these like price action like I'm telling you, man, it's random. The reason that a lot of these guys, they seem to be making money is because of the profit and loss targets that they have based on what the volatility is at that time, and finding the market in a time period where it is more likely to be range bound, so that they're more likely to catch their fill. And everything after that is just noise, right? So I think if you're doing informed trading, or let me put it this way, there's really three groups of traders, or at least when we're in modeling, a lot of models kind of use this kind of framework where there's three types of traders. There's the market maker, there's the informed trader, and there's noise traders. The market maker is just providing liquidity and trying to make money off of the spread. The informed trader knows something that is going to cause price to move a certain direction and is front running it. And the noise trader is everybody else. Retail traders trading off of technical analysis. And generally speaking, the noise traders lose money overall, right? Is it possible to make money being a noise trader? Potentially, yes. Potentially, yes. It's just most of them don't, right? And if you do make money from it, it may just be luck, right? So I see that a lot in ES. There's a lot of people that became real stars from trading ES, that were maybe lucky in some respects. Some there's some really, really good educators out there in our fields that have really good advice in terms of like trading in general, but they also believe things that aren't true. They utilize technical analysis essentially because they've gotten lucky with it. Yeah. It's a lot of noise in ES. I mean, you can get good trades. I found it really hard to differentiate between when we had really good trades like that and when we didn't in ES, right? So I wasn't really able to find real consistency in ES. Like when I look at the treasuries here, I've had my struggles. A lot of the losses that I've had were kind of more due to me dinking around and experimenting rather than like my core strategies. So I think that over the next year, I need to focus more on sticking to my core strategy and back testing things like spreads kind of behind the scenes. I didn't like that decline. They may yet move to a new low. Let's see. Anyways, but when you look at the past year overall, it's been pretty good and pretty consistent. And I've had some periods that were like really great. And I've never been able to develop that level of consistency in the ES. Like in the ES, for me to go like a whole month without some sort of like disaster day where you lost 4 times in a row or whatever the deal is just there's a lot of noise in ES, man. So yeah, I very much prefer the treasuries. It's not that you can't find edge in equities. It's just I think it's a little bit more difficult than people realize, right? Now, the other one that you should look at though, Raken, is I mean, there are like the energy markets, the metal markets, the agricultural markets, right? These are all places where you could trade and you could find an edge. It's just about what is your ability to find information about that subject, right? So if you live out in the country and you have a lot of neighbors that are farmers, then you might be able to trade the agricultural markets. You're going to be more aware of the sources and the pieces of information that predict what the prices in the agricultural markets are going to be, right? If you live in a place where there's mining, you have friends that work at Kennecott Copper Mine. I live in Utah where we have like one of the largest copper mines in the world, right? If you had friends that work at the copper mine, that might help you to be able to determine what copper prices should be, right? It's just a question of where are you going to be able to find an edge. Now, what if you don't have any of those things? I don't live near a farm. I don't know anything about metals. Oil is confusing to me often, to be honest with you. Like this rise in oil that we saw, I saw coming from a long ways away because the analysts were really good analysts and made a really good compelling case for it. But what goes on in Middle East politics in particular is often confusing to me. Okay, so if you don't have anything, where would you go? Where should you go? Equity indexes, treasuries. It kind of feels like that's the only places left, right? And I say treasuries. I say that your ability to find a piece of information that will predict future orders in a market is better in the treasury market than in other markets if you're completely uninformed, because there's just so much what the Federal Reserve does is so important to really every sector of the market that there's just a lot of information out there about what they're potentially doing. And so that's, where I think a lot of your opportunities can come from. There are some things about the treasury markets that are very much hidden from us. So it's not like it's perfect, but oh man, I think that you have a lot better chance in treasuries than other instruments. That's just my personal opinion. And I personally have found much more consistency from doing these micro tenures than from anything else. Being properly, funded and not over leveraged helps a lot too, because you're taking trades that are like really too large for your account, and one bad trade can be like 20% of your account. That really hurts your consistency, right? The new computer in the background, yeah, kind of. It's not a new computer in terms of like new hardware, but what happened was my father he had this machine. I think he was Bitcoin mining on it, and he got bored of that. And he went and he got these new dresser things that he's going to put photos in. So they're designed for planning or holding like building plans, you know, like really big pieces of paper. So you get these really big drawers. So he can print out really large photos and store them all in there and sell them. So helped him move that out. And he had the computer that was in there. He's like, well, we don't want this anymore. You can take it. And I said, okay, I will. And I only put it here in this room today because I didn't know what else to do with it. I don't know if it's going to stay or not. I kind of, it looks okay in the background. I guess it looks okay in the background. I wish that this side of me was a little bit better looking, but that's fine. You know, if we had it, we could get a different case, or we could reverse it around and have so that you could see the insides of the computer there, and that would be really cool, huh? That would be nice. Maybe when we build a new machine, we might do that. Goldman Sachs CFO Coleman, the bank doesn't see signs of purposeful credit deterioration. I think he gave up mining, yeah. I think so he actually got a big miner. It was too loud. and then, you know, it was just doing it on this computer. I think that was kind of like, okay, I'd done it. I'd done the cool bit. Now it's not so interesting, you know? Is that sort of a thing? It's like once you've learned the technical skills behind setting up a server and a machine and doing all that sort of stuff, it's a lot less interesting when there's not the mystery of it, right? He's a little bit ADHD like myself, but he's in denial about it. So this latest trend up looks not too shabby, but I'm not gonna fill my order at 11.5 apparently. So I don't know. What do you guys think? The thing is that I can't put, like, the screen's always going to be right behind my head. So I think the range trade is a good way to find an edge. Yeah, you know what? I've always had a really difficult time making money off of range trades. I'm doing pretty good today. I think that to some extent, if you want to make money off of the range, you probably need multiple contracts, huh? When you're trying to all in and all out, it's kind of hard because you just make one mistake and it screws everything up, right? Doing this sort of a thing where you know, I'm doing it with 5 contracts, but having multiple contracts and adding and taking away as it moves around, I think really helps for you to, you know, generate. So basically you're moving to a bit of a market making strategy, right? Because otherwise, if you're all in and all out, then what they do is they just move a little bit further than what your tolerance is, and then they to stop you out and then flip around. So what I find tends to happen. So okay, now we got back to 3 contracts. I think if I get a break up here, I'll take another one off at like 15. Actually, I might as well put it there at 16. In this order, I'm going to cancel for now. If it comes back against me, I might need to play it by ear a little bit better. anyways, for the computer behind me, the other thing is that I do eventually want to have like a multimedia computer. The problem is I would want it to be like the best for acoustics. That would be kind of hard to do in the room with the way that things are set up. Have two computers and do it like that. Might be possible. I might have to move this over to there and this over to there, and maybe I could work it out. I don't know. I don't know. But it's too hard for me to have like all of my DJ stuff and everything on here, right? And I would like to have another machine with a really nice monitor colors to do like video editing on. Something that is more geared towards video editing and music production, so that I could be on my computer working and somebody else could be editing a video. Like that's the longer term plan. So I think that that's a long ways off. But if the channel takes off to the point where somebody could live off of the income, then probably what I'd do is I would hire somebody and I would say, okay, you have a job every day, every week or every other week we have a full video, but then every day I want you to go through the stream and try and make it short, right? That sort of a thing, and they could do it on that computer, right? And we'd have a monitor for them so that they can get the colors all right and everything. Something geared specifically towards video editing. Maybe just a MacBook. Maybe they just have a MacBook. Then they could take it home if they wanted to. Let's see here. How far did they come down there? They got all the way to 14? Oh no, the orders that I have at 14 are from way earlier. So I'm just going to clear those orders above us. In fact, I'm going to do it on all of these. So I just wanted to like the YouTube shorts. The YouTube short from here was like, last a while. I think what I want to do is like I'll probably post a video today on TikTok. That's kind of a more basic video, and I'm trying to get to do more. It used to be that if I posted like 2 or 3 videos in a day, I wouldn't do very well. Like the subsequent videos wouldn't do very well. But now it's helping. So I think I'm gonna start producing more short form content. But a lot of the short form content will be like responding to comments, right? So I think what I will do is I will like start with the same base thing. But if I'm responding to something on TikTok, I won't repost it to YouTube and vice versa. that might get kind of weird. But I think that's what we have to do. So they're shying away a little bit from that large order at 11, but so far the market does seem to be going the way that I thought. The downside move was a little bit larger than I thought it would be. I did end up feeding it, and I was right in this particular situation. Oh, I really hate feeding something, but I was kind of like, I don't know if this really makes sense to just trend all day, right? It's going to revert, and the order flow is getting weak. I guess we saw the order flow getting weak, and so that's how we were able to sort that out. But I guess just the reason why I'm kind of a little like iffy about it is because like I wouldn't be able to guarantee that trade would work out, right? I'm not sure that the setups that I've had that are allowing me to do okay here were really solid setups that you'd really want to regularly take. Okay, a little bit canceled there, I think. oil is extending its move, and it's now at 99.4 or so. So they might have a $4 rise up to $100. Yeah, what Jacob beat me to it. Oil might see 100 today. Yeah, it could be. It's kind of this problem we have all over again, right? Where it's like every time that we might see something that makes it seem like, inflation will cool off and everything, then the markets will get bullish again, and that will cause the inflation, and it makes it hard to sustain. You know what I mean? The wine. I built a small financial hybrid app in React. What is Tauri Farm Record? I'm not familiar with that. That sounds interesting. And what does it do? Is that Tauri? Is that like a web framework for Rust? It's like ASP.NET for Rust or something. That could be interesting. It's Electron on steroids. Oh, so is that to mean that like it's an application that you install on your machines, but ultimately it's really a web app running underneath? Hmm. Well, I don't know if the actual like mechanics of the tool is like too interesting, like something that I would regularly use, because I'm not super interested in the cryptocurrency market. But I am interested in that because I recognize you from, you've been around for a while. I am definitely interested in seeing what kind of programming work, the what viewers of this channel have made. So if you probably should send it to me in a message on Discord. I could trade out. I'm feeling a little dehydrated this morning. My lips are getting a little chapped. The S&P 500 not moving so much since the open. There was a little bit of volatility on the open, but overall it's been very, very range bound. Very, very range bound. We'll get some numbers here in a minute. Nothing, not a very significant market mover though. We should be able to read the results from Goldman now, right? I don't see anything about it on Zero Hedge. Heat apocalypse blasts Europe as UK and France brace for the hottest days on record. Gazprom reportedly declares force majeure will halt gas flows to Germany indefinitely. Is that why oil's moving up this morning? That could also be a reason to bid treasuries, to be honest with you. Although, kind of not bid treasuries too. That could lead to more geopolitical conflict, and then you would want to buy treasuries, but it's also inflationary, so then you'd want to sell treasuries, right? Maybe if I go to CNBC, they'll have the Goldman results. Second quarter profit fell 48% to 2.79 billion or 773 a share, driven by industry-wide declines in investment banking revenues. Still, the results were more than $1 higher than the average analyst estimate reported by Refinitiv. Oh, very, very good. Revenue fell 23% to 11.86 billion, which was a full 1 billion more than analysts had expected, driven by a surge in fixed income revenue. The bank's fixed income operations generated $3.61 billion in revenue, topping the $2.89 billion street account estimate on significantly higher trading activity in interest rates, commodities, and currencies. Yes, sir. Trading has been good. We've been doing pretty good, haven't we? And Goldman's been crushing it. So there you go. Question is, how well will we be able to do in trading interest rates when that changes? Well, I guess it was to the downside, so it's still. I know, we'll see. They were up 4% in pre-market trading. I'm gonna make some money today, my boys. Where does that put them? We need to look at a chart. Good counter trend to buy today. Yeah, I did take it. I was actually buying all the way down at 06, believe it or not. But I didn't take very much from that earlier stuff down below. But we've banked in an okay profit so far. I don't know if it's really gonna bust up these highs or not. I might be asking for too much with where I've got my next order at, but okay. GS. Oh yeah. Well, today's move really only takes us to the high end of the range from the more recent past. So we're still only just getting back into like June's numbers, May and June's numbers. But I would say that's really nice looking. Only we were back at 420. I said I would like to ask you why the number of pending orders is currently so low. Yeah, well, we've just been seeing a lot of volatility lately, right? So a market maker is going to use the historical volatility to determine how many orders that they're willing to put out there. It's probably the case that a large player at some point got demolished here in this year, right? So that's probably another factor here. I'm hoping that this week that we'll see the liquidity build back up, because we're not likely to see as much volatility as we were in previous weeks, right? We're in the blackout period for the Federal Reserve. Of course, we have the housing numbers, but I don't necessarily see a reason that the housing numbers should be like a huge surprise to everybody. So, that might mean that treasuries might kind of do a little bit more of a trading the range thing this week. And then that hopefully should make it so that we can build up liquidity. But I agree, especially when it's like 800 and below at each level, like that's a really light liquidity, and it really makes it difficult to trade because it only has to, only a few orders have to go through to make it move on you. So it's like, yeah, you want to predict future orders, but when even 5 orders can move it, what do you do, right? It makes it a really, really difficult to find a spot and stay in a trade, right? Better for swinging it here like we've been doing. Not swinging it, market making it. Taking out of the range. Waste of time, there is no end. What I'm doing right here in this treasury is I would consider a high risk Seth playing around so that we don't get too bored. I mean, I think I played it correctly, but I'm not too confident in my ability to call that kind of move consistently. Like that kind of move screws me over all the time. Today, I knew what the tendencies were, what the the overall order flow I was expecting to see, and it was kind of showing it was weak, and so I saw us move up. Now on the upside, I'm not necessarily seeing it as so weak on the upside. But what I'm seeing on the upside is also something that I think can be unsure, and there's absolutely nothing to stop the sellers from getting more aggressive here and pushing it back down. That's entirely possible. S&P 500 is maybe going to test the downside. That could help us out. Becomes more difficult to trade, yeah. Well, the thing is that the order flow can give you really good signals in the range. It's just, I don't know. And whenever I try and do that sort of thing, I get screwed. So, is your options affiliate link still available via SOTG? I'm not sure what you mean by SOTG. Oh, spot gamma. Yeah, that should still work. In the spot gamma video. I only put it on this spot gamma video. I don't put it on all of my videos. Like the way that I try and keep, because here's the thing. When you look at what this channel has been about, like what are the sorts of things that I've been teaching, there is one kind of central idea that I don't really highlight as the central idea so much because it's not really all that interesting, but it actually is a really significant part here, and that is that systems, the structure of systems have a very strong impact on how our systems behave. The structure of this system has a high degree of predictive power about how a system is going to behave, right? So if you look at a cultural issue, everybody thinks about that cultural issue as like, well, if you get enough people that want to, like they think about like with civil rights, okay? Well, you got to get a large enough group of people to get really animated about the issue, and you get out and you organize and you march and everything else like that, and then they make the change, and that's how change happens. Okay, right? I have a different take. I think that civil rights was bound to happen one way or another, and those were the people that just kind of saw the right time and made it happen. The way that society was working as we became more and more interconnected, and distance was not such a big deal, it was inevitable that civil rights would improve in the United States. So it is a structure of systems that are very often why things go the way that they go, right? So when we're talking about affiliate links, we kind of have a conundrum, because for me, the incentive for me, and the way that the system is kind of structured, is that I basically have an incentive to push an affiliate program as much as I can to make as much money as I can, right? Which is not necessarily the optimal thing for you, the viewer. So how do we kind of keep things in line and prevent you from just going crazy onto, whatever affiliate link program seems to be paying out the most, right? Like Andrew Tate, man, right now, he's the thing. It is all over TikTok, and apparently it is because he has an affiliate program sort of a thing where he pays people for, if people visit through their affiliate link and everything. They must be making money. I could put that in my bio, right? Maybe make more if I pushed Andrew Tate stuff. But no, I don't think so. I think that hitching your wagon to Andrew, although he seems like a bright guy, yeah, he has some good points. I think at some point, people that hitch their wagon to him are going to regret it. But I digress. So what do I do to keep the incentives in line for affiliate links? I'm only putting affiliate links in there that I'm using, essentially. Right. So all of the things that you see in the links of every video, those are services that I actively use. The one that I recommend the most is the financial juice, man. If you're trading and you do not have a news squawk, then I 100% recommend going and getting financial juice. It is very, very difficult to make money without having a news squawk, without knowing what's going on. Okay, it's a very, very powerful tool. And it used to be that retail traders didn't do that stuff because it was too expensive. But now at $70 a month, that is reasonable. And they have a package that comes around. I don't know if it's available right now, but you can pay like $1,000 for a lifetime subscription, which is what I do. And that's why that's like one of the first ones in the description. So I've had many people offer me affiliate links in the recent past that I declined because I said, well, I'm not going to use that product. Like, it seems like it's a cool product and everything, but I'm probably not going to use it, right? So Spot Gamma is kind of in that world. Now, I haven't spoken with Spot Gamma, but they just have an open affiliate links platform, right? And in that particular video, because we were talking about it, and a lot of the stuff that I have learned has come from watching them regularly over the years. So I felt that they deserved the shout out, but so that's kind of how I worked it out in that one. Was if it's that one video, then I'm going to put the link out there for it. But, I'm not going to be pushing affiliate links in every video for it, like I do for the services that I directly use. Yeah. I haven't even looked at it. I don't know if should come in and try it. Cool. There's a few visits from it. So what is the click-through rate on that actually? How many views did that video get overall? When I do a video like that, I'm not so concerned about like how much money I made as much as it is like how convincing am I? How many people actually clicked, right? So 359. The click-through rate is pretty low, actually. It's 12 divided by 359. 3% conversion rate actually is not bad. 3% conversion rate is about what we should expect to click. I don't know. If you really wanted to make money from it, it'd have to be a lot better than that, but well, we still got a whole 45 minutes. By the way, what was the housing numbers here again? Let's refresh here. Was 55. Wow. Versus what were they expecting? Wait, why isn't it not showing me today? The forecast was 66 and we got 55. That's pretty dismal. But since that number, the treasuries have kind of been trending more down, which is curious to me. Because that number being bad kind of makes the 75 basis point hike even more likely, right? It's even more likely that they'll just stick to a 75 basis point hike. By the way, on this options video, what were they? Okay. Oh, yeah. And some people did search for Archigios and they got it. So cool beans. That's interesting. Celsius is declaring bankruptcy, but the worthless cell tokens are still 80.8 tethers each. The magic of fraud. Yeah. How is that 0.8 tethers? That's crazy. Does the spot gamma have live intraday rates options? I don't know. You should do a trial and find out for me. I think they're supposed to have like this options data for all markets, and so I would assume that they would have it for the treasury market as well. Although the thing with the interest rate markets is that the information that you can get out of it is maybe not as interesting. So you get like big strikes like every half of a point. So it'll be like 118, 118, 16, 119, right? So like it's such a wide range that it doesn't really come into play very often with the treasuries. That makes sense. Knowing what is just going on in the interest rate market in general is a much better predictor of how much the treasuries are going to move. They're very news sensitive. It's the spreads are the ones that are technical, statistical, and really reactive to flows and stuff like that. The outrights, you really got to know what's going on. You got to be an informed trader. I was kind of curious. The been a little bit quieter of a stream this morning. Like we got about a dozen viewers. Not unusual for a Monday. But a lot of chat. So thank you guys very much. It's like almost everybody that came in has been chatting with us. So that's great. How much do you think that the equities make another new low there? Maybe they start retracing the overnight action? I think that probably the stream viewership has gone down because YouTube just doesn't recommend that stuff on the front page as much anymore. We need to, I'd have to more aggressively promote the stream, essentially. Like, I'd have to pretend like we were streaming on Twitch, and everybody that comes and visits the stream came from Twitter or Facebook or whatever. What state? Oh, you mean like what state of the United States? I'm in Utah. I live in Utah. So I'm looking for signs of like the liquidity hole at 08.5 still being there, and it looks like that they're willing to put large orders up there and that they are just chopping around. The Japanese yen is showing some aggressive buying here now. It's more, or rather, the Japanese yen is having more aggressive upside than the treasuries are. Curious. I'm wondering if there's anything more to read about Goldman. I don't think so. I don't know why Zero Hedge hasn't posted their synopsis, but I guess they don't really like Goldman. Oh, no, wait, there it is. Reggie, welcome back. How are you? Investment banking was where most of their drop came from. That's okay. They were never really good at the investment banking bit anyways. They've always been more trading. Net losses in equity investments reflected significant mark-to-market net losses from investments in public equities and significantly lower net gains from investments in private equities. Do you see a lot of cars with the Florida? Not really. I suppose I'd see more of those than like any other foreign state license plate. Of course, California is the most common. California and Nevada, maybe a little bit of Colorado, but then after that, I would say it's Florida. But I'd say pretty rare to see one from Florida. Are you breaking the market today? No, not really. I'm managing. I've been managing a position here. It's been a little bit frustrating. I've had some really good excursion. I think I probably should have taken off another contract up in here. You don't see too many Utah plates there? No, probably not. It's a long way to drive, dude. There's not a very direct route either. Anybody that's from Utah going to Florida is going to fly. Goldman managed to cut spending by an impressive 11%. Wow. Okay. I don't think that there's too much interesting to tell you guys about the Goldman results, unfortunately. California, New York, and Texas is a long way too. Well, I'm surprised that you'd see them from New York and California. Yeah, that is weird. The S&P 500 didn't quite make another new low there. I think is maybe part of it here in the Treasury. Although, well, there's a little bit of your sign of low liquidity at 0.85. That one doesn't look so much like that it's exhausted as it is like this is the center. Nobody's that interested in really trying to. Oh, my voice. Nobody's super interested in trying to move it right now, it seems like. So that might be why that's happening. That's okay. We got okay practice today. David Solomon, I do not expect the same macro challenges in the coming 6 to 12 months. Oh, really? The problem I keep seeing is like, I don't think that the environment is going to change for a while. I don't know, when the market feels kind of slow like this, maybe that means that like it's time for the next shoe to drop. I hope not. It would have just been a crazy year already. We don't need something else. I don't know. The moment the treasuries do kind of look like they're leaning towards the short side. Let's see here. Oh, that's the new Scott guy again. Oh, yay. Oh, it's our last day of our subscription. That's okay, though. Was looking at the charts before the pandemic started. I hope we aren't heading back to those days of almost no movement. Well, I don't think that we're gonna, I don't think that we're gonna go back to some of the days where it was like in the 10-year treasury, the range for the whole day would be like 8 ticks, sort of a thing. But we've had some really excessive volatility in the treasuries in particular this year, right? That's gonna have to come back. But I think that the economic path forward is still going to be fraught. I think that there's still going to be a lot of trading opportunities, specifically in individual equities. You know, like what we're seeing here in Goldman Sachs today, 5% up move. You know, I think you're going to see a lot of that. I think that you're going to see a divergence. Some companies are going to do really, really well in the environment, and some companies aren't. I think that there's been a lot of like growth where it's just like anybody that's putting any money into growth is making money, and that's come to an end, I think. So I know that the value stocks haven't necessarily done super great, but I am kind of looking for an environment where value outperforms, right? And so you'll still get good moves in the treasuries, but it won't be probably like it was for the first half of the year. But that could change. The US could fall into a very deep recession, causing the Federal Reserve to completely reverse on interest rates, and then we would get zany stuff all the time again. Totally a possibility. Well, I'm going to take some off here, I think. Okay. Because this range has been pretty tight. So I want to give myself a little bit of room. And that puts me in profitable zone. This is a sim account I'm working with today. So usually if I do my own account, it's going to be in the micros. But now I think I can just try and let this last contract run. I probably could have gotten a lot better off of it. I probably could have taken it off here at 12 and then maybe even added down in here. But with the way that it's going now, I think that it's best to kind of deleverage a little bit. And if it runs, it runs. Let's just sit here. They're pushing the higher end of the range in the treasuries, but you can see that like once that initial down move kind of backed off, since then it's been tight, hasn't it? I mean, this range from here is like 12 ticks, so R factor, the most overlooked metric in day trading? I don't agree, but that's okay. I think that if you don't know what R factor is, then you're probably brand new. But I think it's other things. The higher your percentages, The higher your win rate is, the higher the kurtosis of your trade. That's the thing that people miss. And the higher the kurtosis is, the more trades you need in order to prove a statistically significant result. In other words, you need more events so that you're more likely to see a tail event and see if you're still profitable after the tail. Can you survive the tail? Let's come through here. Oh yes, I have some stuff. I got all sorts of interesting things going on this week. It's going to be an interesting week for me. I've got lots of things to do. It's going to be hard for me to stay focused on my work. Well, liquidity is getting a little better now. We're getting most prices above 10,000. Well, China Defense Ministry says responsibility for any undermining of military ties between the U.S. and China to be entirely borne by the U.S. Right? Okay. Because your guys over there saying we should drop a nuke on the U.S. Totally. Yeah, okay. I love state propaganda. Even U.S. state propaganda, man. Bernie Sanders slams Biden visit. What are you guys? You guys watched this Biden trip to Saudi Arabia thing too much? Because, from what I saw, it was kind of like, not very interesting. But some liberals are really upset about it. Why do you care so much? I'm surprised they care as much as they do. I mean, look, he finally realized the error of his ways. You don't want Saudi Arabia to be mad at you. You have an energy crisis. That's not good. There's only so much that the Saudis can do, but they probably will start to help us a little bit more. The thing is that they can only, increase their own output so much, but maybe they are able to encourage other OPEC countries to increase more. Maybe. We'll see. Other than that, doesn't seem too interesting, but liberals are like so mad that he even went over there. And are you mad that he went over there? Do you think it reflects poorly on him? Or are you just kind of like, meh? Okay, every president goes over there and shakes MBS's hand. I don't know. It's hard these days to tell how big of a deal something is, right? Because everybody on the internet just is so hyperbolic about everything. Ugh. It used to be back in my day, when somebody posted something on the forums, all right, that was political, they make a big deal out of it. Oh, the Republicans are doing this, or this law passed or whatever. There would be a bunch of people in the comments that would be like, yeah, but actually this is like not a big deal. Like there's no way this is going to pass. They're not going to do that. They're not dumb. You're misunderstanding the issue. Whatever the deal was, there's always all these people, and I fell into this a lot. Okay, so there's a group of people that we loved to just come in and rain on your parade. Oh, actually, it's not as big of a deal. You don't really know what's going on, right? All these people. Okay, in the modern era, these people don't post anymore. It's like you go and you post it in a Facebook comment, or like you're responding to a Facebook comment, like nobody reads it. You post it on Reddit, it's like nobody reads it because of downvoted, right? It's all the hyperbole is always at the top. It's a hyperbole, and then if even if you would say, oh well, let's try and get at the top of controversial, it's usually not the person that's just giving the cold, boring facts that says, this issue isn't as interesting as you're all making it out to be. No, that's doesn't happen anymore. It's like every incentive. Remember, structures tend to predict how our systems will work or behave very, very well, and very often much more than what people's opinions and culture and so forth is trending towards, right? That's an important thing because there's a lot of stuff that let's talk abortion, for instance. Should I talk abortion? There's like, oh no, so it's gonna talk abortion. We better quit the stream now. The left is getting very animated about the abortion issue because they think that now is the time to organize and so on and so forth to overturn it or whatever the deal is. But I think that the structure of the political system is such that this will likely remain a controversial issue for a long time that is fought much more at the state level than it is at the federal level. That essentially at the federal level, nobody will be able to pass a law that really makes a significant change or that would, apply to all the states and like undermine certain states' pro-abortion laws or whatever the deal is, right? It's just the structure of it. The structure of it lends itself towards deadlock, right? It's probably not going to change. We can use that to predict things. Or, more importantly for us, in the markets, right? Well, if there's an area of low latent liquidity, market will have a tendency to be dragged back into that spot because it just takes too many orders selling through the liquidity to get out of it. They might try a push and just, okay, so now that was an interesting little turn there in the treasuries, by the way. Did something happen? No, I don't see anything. Maybe something happened in the 2-year because they all just kind of got ripped down there real quick, didn't they? But anyways, 08 is the whole. And oftentimes the structure can predict what's going to happen better than anything else that's going on. So we have to understand systems. And if we want to improve the world, it often involves changing the structure of the system. Like people think that like the solution here is like get rid of capitalism or something like that, right? No, because communism is a different system. It has the same problems. The same problems being that sometimes the structure of the systems do not lend themselves towards the goals that you have. Capitalism, it more generally does lend itself to the outcomes that we want, but it's not perfect. There's some inefficiencies in there, right? So we have to come in and structure our markets to address these inefficiencies, really. That's what it really comes down to. What's the CFTC saying here? CFTC registered entities pass certain checks and must meet customer protection requirements. Be alert. The red list IDs 200 plus unregistered offshore trading platforms and websites targeting U.S. customers. Oh, so these are all of the places that we shouldn't trade? Let's look at it. Let's look at it. Let's look at their list. 1 billion Forex. 2 options. Wow, there's a lot. How many did they say there was? 200 plus. Well, I don't think we're going to read them all, are we? Huh. Allegro Markets. Advanced options. Can I have it show us all? Yes. I think it did it. Yes, it did. Oh, most of these are like, why would you? They're like trying to copy the names of more popular exchanges. There's so many. You know what? I think the reality is that it's easier to run an option. It's easier to run an exchange than we probably think, because there's that many people, people making exchanges that the CFTC has to warn people about. Like, man. Win Forex trade. It's like, yeah. Treasury's still just chilling at 08. So for me, with this one contract, huh? I forgot. Well, I think I had some okay action here today and okay decisions, but I didn't really play it to its full potential, did I? Kind of got into like, oh, well, it seems it's working out pretty okay for me. I feel good about myself. I got the dopamine hit. Now I don't have to try anymore. I could have stayed focused and tried to pull more out of their range, and I'd probably be in a more clear position to be able to like take it off and be like done. But what? It's okay. This heat wave thing in Great Britain is going to be a problem, I think. The Royal Air Force has halted flights in and out of its largest airbase in the UK because the, quote, runway has melted, unquote, in the hot weather. According to a military source, the decision to shut the runway at RAF Bryce Norton was taken on Monday morning. Guys. It's building a runway is expensive, actually. It's my understanding. You want to make one that's like, resistant to attacks and so forth. Can't handle the hot sun? What? Well, okay, it's the UK. I get it. You're not used to it being hot. But listen, my fellow Brits, because I live in a desert. I mean, I've been doing a lot of research about this the other day, because remember I was saying, like, you don't wear black in the desert. Apparently you do wear black in the desert if it's like the way that Bedouins wear black, but they're also the way their clothes worn on their bodies is a little bit different. And the science is not settled. I'd say the science is not settled. I think you want to go for lighter colors because that will be more likely to protect your skin, but I could be wrong. But loose clothing, Brits. That's what you want. Loose clothing. Like maybe you still want pants because it's sunny out there, and you don't want to get your legs sunburnt. And I know you're all really creamy. Like you want, you want airflow. You want pants that let it flow, like the air flow up you. You know what I mean? You know what I'm saying? Well, am I gonna have to? Well, I could add to it. I don't know. Let's see. We got 15 minutes left. They kind of acting like they're gonna go for another new low. I think it's been too long. Wait, how? So this was 6:45. So 8:49 would be an odd time for it to go. But it sure is kind of looking like they're going to break that bottom side. Well, it is only equal to the last downside, which means I should probably add one here. Since it's a sim account and I'm feeling lucky today, because really, whatever good trading I've done today, I don't think it's because my brain is like super on today. I don't know. I was having dreams last night where like I would wake up and it didn't feel very good, and I felt like something was, things were going bad and stuff like that. This is usually not a very good setup for Seth taking trades. But what we shall do is, if it goes a little bit lower, maybe if we see them exhausting on the downside again, we might try taking the trade again. And if not, we'll just blow out at like minus $500, minus $1,000 or something like that. And then you close it and pretend that we didn't take the trade. Because it's a sim trade. Because what we're doing really is kind of more of an example and practice on trading ranges, right? Because we may have to do it a little bit more in the near future. Here we go. D, are you saying that they're going to move down just to screw me over? I hope that's not what happens. Then, Bill O'Reilly, what's you talking about here? A new handheld ultrasound invention is the winner of the 2022 MedTech Breakthrough Award. Petco is arming its vets with it at 200 plus locations. Oh, wow. So we can get a ultrasound of our pets. EU passenger car registration down 15.4%, the lowest month of June on record in terms of volume since 1996. Now the cumulative delta too many longs looks like they shaking the tree. I do kind of feel like it's shaking the tree. The cumulative delta, what I'm seeing right now, and I think in this kind of a situation, so if we come in over here and look, when you look at the 30-year, it's all down. And when you look at the 10-year, it's all up. And when you look at the 5-year, it's a little bit less clear, but it seems like that in the 5-year, it is also mostly up. So I think that the changes that we're seeing in the volume right now are probably more related to what the spreads are doing rather than what the ultimate direction of this is going to be. The thing that seems to be moving them the most... I can't even say that. Since this low right here, right, the Japanese yen and the treasuries all bottomed at the same time. The yen has come back up quite aggressively, but the treasuries have not. Where do you read those news? Those are all just coming off of Twitter on TweetDeck. And I have a video about trading the news, and in that video there's some links to like a list that is worth following with key news stories. Ian Shepherdson's commenting on the home building number. So home builders went to sleep, believed their own hype, read the media nonsense for a few months, then looked up and realized that all of the buyers have gone. The real estate market has really just completely collapsed. Delta doesn't matter, dude. Nothing is moving. Well, let's not say that Delta doesn't matter. Delta's not going to be very predictive of where they're going to go, especially not in the kind of action that we're seeing, right? Because if we're seeing a large meta order enter into the market to cause the market to trend in a certain direction, then what we would expect to see is strong correlation between price and cumulative delta, and strong autocorrelation in the individual data series. In other words, it just continues to move in one direction, right? But are we expecting a large meta order in this market? No, we've explicitly been saying no. So yes, in that instance, we could see cumulative delta be difficult in some places. But I do think that what D is saying might end up mattering. It's something that we have to keep an eye on, which is that at least in the 10-year, there's been a lot more market orders going long. So if we do test the downside, and let's say that we're testing the downside just because of correlations with instruments that we're not aware of or something like that. But you know, let's just say there's not a really an imbalance in the order flow in the treasury market. We're just market makers are moving us with pulling in their bids and asks in relation to a correlated asset. Okay, so if that is what's happening, well, there's a lot more longs to be panicked on at the bottom than there are shorts, at least people that entered with market orders. So us coming down here, I have to say, us coming down here to 06 and things still being pretty lackadaisical doesn't really speak too well to it going lower. But when you get that sort of a thing, you'll often get like what we had to begin with, where they do end up pushing lower just because nobody thinks that's going to happen, and then it reverses. Could be possibly what happens. So we'll have to see. There's that order there at 07 is that 1700 or so on top of it is a little curious. We have I would also point out that the liquidity is a lot stronger now that we're at the lower end of this range near the 06 than it was when we were at the top of the range when we were at like 12. So that might mean something, but that probably just means that the market makers are getting more confident about being in the market. Well, it's not 1700 anymore at 07, but it's still there, 1400. Hold. We'll recenter it right here. Well, let's never say that a piece of information doesn't matter, right? Especially when that piece of information is something about the orders, right? The orders always matter. It's just a question of, will the current orders that we're seeing be predictive of the future orders? Probably not. There's just too much noise in it. Okay, they did tick up there. Does kind of look like the beginning of an uptrend again. Let's see. Well, now we're getting almost 2000s around the inside and the treasury. What do you think about that? Offers getting big here. Look at the bits. There's a 1900 at 06 and an 1888 at 05 half. Yeah, they could hit it, but I don't. Why would they hit it? You know, I think that you could be seeing guys on both sides wanting to get filled and just having a hard time making it happen. You know, if I was sitting here with an offer at I have an offer at 09, right? My hopes that's going to get filled as I feel are diminishing, right? And I think guys on both sides are probably thinking about that. Well, okay, so they slammed through the 06. There was not 1900, there was 1300 there at 06. Maybe the seller is making a call. Let's see. Oh man, that stretch, I can feel it. It's like, yeah, my body's a little tired. I wasn't the greatest sleep. I've been low on my multivitamin. I need the magnesium. Or is it the zinc? I'm not sure which one it is. There's a resting bid at 0.3 well, I would never put too much emphasis on the big bids and offers that are going to be at the daily highs or pivot points, okay? Because those are almost always there, and as far as I've been able to tell, have no significant predictive value at all. If anything, it's just a really good rule of thumb to just like you can discount those, right? If like this one at 0.2 was like a lot larger than that, and I was seeing them all on one side and not on the other side, then maybe that would be significant. Now, there's been a couple of significant downticks on very little volume, so the correlations here might be changing, but it's not the 6J, so I'm not quite sure what's moving it. We might need to be suspicious. This is a kind of situation where the market makers could probably pull off some sort of a shakeout. 1435 at 05. Looks like your stream might go longer the same. Why do you say that? No, I can't. I have to shut it down like right now. Well, what should we put in the title? When we say dollar gives markets strong dollar gives markets a rest. That's really the biggest thing that I've seen here today is that the dollar was backed off a lot today. Shaking the tree. I don't know if that's really. I mean, the problem with the shaking the tree kind of like take on things, that could be what's happening, but it's hard for us to really know, right? Because, like, if we have a move based off of, some piece of news, or they're front running some end of month rebalancing or something like, like we can kind of correlate the timing that those things happened and everything. But like when it's just like the position of day traders, that one's really difficult to like prove at all. You could get treated. It really was a sleeper Monday, wasn't it? Sleeper Monday is rate expectations cool. All right, it's time for me to get going. I'm gonna scratch this probably, but I will see you guys tomorrow. There's still some good news, and we get some have some fun stuff. Randy, hey, thank you. Yep, stay profitable, friends. Listen, this week, I think the focus is don't lose it all, right? Because next week there's that FOMC meeting, right? There's gonna be some opportunity after that, I think. So right now, I'm more concerned with it being kind of rangy about capital preservation. So, yep. Bye bye. Stay profitable, or at least don't lose.